This all I really gotta say right here, bro. This all I really gotta say.
I want to talk about today risk management.
Risk to reward is more important than your win rate.
Risk management really ties everything together and it makes everything make sense because the numbers at the end of the day have to make sense. The math has to math. Good morning. It feels amazing. Back with another video. It's your boy Ali. So it's November 15th today. No pre-market analysis today because I stayed up till like 2, 3 a.m. doing some research, so had to get some rest. But today, definitely gonna hit the park. It feels amazing outside. Sun is out, no clouds in the sky, wind blowing, so definitely gonna hit the park, get a great workout in, read, stretch, all that good stuff, everything I do on a daily basis to make myself better mentally, physically, spiritually, and financially. So let's get to these charts. We are in a trade right now, so let me show you that right quick. All right, so I did just enter some sales on US 30. Enter some sales at that, right at that rejection. Let's see if we can get down to our 1-to-1 target right here. If we get down here before going up here, then I'll move my stop to break even and we'll be good for the day. First trade of the week, only trade of the week is Friday. So let's see, currently up $30 and see what happens. So we just hit our 1-to-1, so I'm about to move my stop loss to break even. We're targeting our 2.4R on this trade. So we'll see if it hits. Currently up $118 on the account. So no matter what happens, I will not lose money today, and that is a freaking W. So let's set the stop loss at 43,502. If you let me, there we go. 43,502. Stop loss, modify trade, and we good. So let's see if we can hit TP2. Right, so I did ended up breaking even on this trade. You can see right here, lost $1.30. That's just the spread, but 11:15. That's today's date. This all I really gotta say right here, bro. This all I really gotta say. All right, so we ended up not taking a win or a loss today. Break even on the week as a whole, which is a W, especially considering that we had FOMC and OPEX this week, which are two very volatile events, news drivers in the market. So slow November so far. We're halfway in, got 2 weeks left, so we'll see what happens. Hopefully we can get some decent looks next week. I'm liking crypto. I'm liking the stocks moving up, so portfolio is moving well with that. And I want to talk about today risk management. I talked in the last video about my strategy and finished going over my whole strategy, but risk management really ties everything together and it makes everything make sense because the numbers at the end of the day have to make sense. The math has to math. So once I get this workout in and I read my book and do all the meditation and all that good stuff, I'm going to give y'all a breakdown on my risk management and break down the numbers for y'all. So yeah, let's get into it. All right, what's good, y'all? So, just got done watching that Mike Tyson fight. Trash. Shout out to Mike. He didn't die. And he lasted the whole fight, but trash. the ladies that fought before, crazy work. But yeah, did everything I was supposed to do today. I did a little bit more than I would actually set out to do today. So whenever I, choose to watch a fight or watch a sports game or whatever, I don't really feel bad about it. Don't feel guilty because I know that I'm doing everything I'm supposed to do. So yeah, with that being said, I'm finna finish this video. It's 12:30 a.m. right now. But guess what? I still have to do what I'm supposed to do. So I'm about to go over my risk management plan because I put my strategy out there. I broke it down about how I enter, what everything that comes with my strategy. But what makes the strategy work is the risk management, because I'm able to lose more than I win, and I can still make money. So I'm about to jump into those numbers and just simplify them for you, and make the numbers make sense, because I feel like a lot of people, especially just starting out in trading, you think you have to have a 70, 80, 90% win rate. Nope. There are some people with 30% win rates that still make more money than most people that have 60, 70% win rates, So it's not about how many trades you win. It's about how big your wins are when you win and how small your losses are when you win. When you lose. So I'm about to get into that math and break it down for y'all. And then that'll be really it for this video. Tomorrow, Saturdays, I take them to myself. I don't put any videos out. It's a full day just for me. So no video tomorrow, but I'll be back Sunday for the weekly recap, which is really nothing to recap for the trading because I only took one trade and I kind of already went over it earlier in this video. So I'll be doing more of a market outlook, and then I can look at some crypto stuff, because crypto is we're about to have a super cycle with this stuff. So I'll give my thoughts on that. And yeah, so let's get into this breakdown of the risk management. I bet. So risk to reward is more important than your win rate, and I'm going to prove to you why. So we're going to use a sample size of 10 trades. This P&L right here, I've already coded it. You can see it up here, to multiply the wins, each win, by $500, because let's just say we're on a $2,500 account, right? We're on a $2,500 account. Okay, so I'm going to risk 10% of my account on each trade, and my risk to reward on each trade at minimum is going to be 2 to 1. Yeah, in the real trading, you're probably going to hit more sometimes. There's going to be opportunities for you to make more than 2 to 1, but at minimum, I want to make 2 times what I risk. So I've coded this P&L right here to multiply L124, which is this. You can line it up. L is this column, and 24 is the row. So multiply this by 500. Why? Because when I win, I want to win twice what I'm risking. So 250 times 2 is $500. And I also have it coded to multiply this column, the losses column, L125, by 250. Because when I lose, I'm only going to lose 10% of the account. So this is how you make sense of the numbers. This is how you make sense of the numbers. And this is how I was able to really establish confidence within my system, regardless of the win rate, because that was one of the main things that was holding me back psychologically. I just couldn't stomach not winning more than I lost, or at least winning half. And once you do the numbers, depending on your win rate, and depending on your risk to reward, that determines the win rate that you need to have, right? So with a 50% win rate, if I win 5 trades and lose 5 trades, risking 10% of my account,
$2,500, risking $250 per trade. Over a series of 10 trades, I will be profitable. I will make $1,250, right? Now, let's just say I win 6. I win 6 trades and I lose 4, right? So that's a 60% win rate. 60% win rate, right? So now I win 2,000. Okay, like that makes sense, right? You go up, the higher your win rate, the more money you're gonna make, right? Okay, cool. But the whole point is here to see what happens when I only win 40%, right? So I win 4 and I lose 6. Still profitable. Still profitable. Now, what happens when it's a 30% win rate? When I win 3 and I lose 7. Now I'm negative. And this is how you see what win rate is you actually need to have in order to be profitable. It's not a guessing game. It's all numbers. If your average risk to reward is 2-to-1, in order to be profitable, you need to have at least a 40% win rate. Why? Because a 30% win rate, you're going to be negative. But with a 40% win rate, it'll be positive. And it's not life-changing money, but it depends on your account size. It depends on your account size, because $500 is still 20% on the account. 20%. Some people are elated with 20% gains in their stocks over a year. This is just 10 trades. So it's all about perspective. It's all about perspective. So that's really it. Like, risk management is not crazy. And once you have an understanding of this, you have an understanding of these numbers, it makes it easier to analyze your actual data, analyze your actual technical analysis. Lets you know, okay, how do I adjust my targets? How can I adjust my stop losses to be smaller? How can I, what changes can I make? Once you understand the numbers, for me at least, that's how I've gotten to where I am right now, how I've gotten better with my trading, and just psychologically, just seeing these numbers and making them math. So let's kick this up to a 3-to-1, right? Let's kick this up to a 3-to-1. All right, so now let's change the code. So when I win, I'm winning 3 times 250, which is 750. But I'm only still losing 10% of the account. So I don't change the amount I'm losing. So now let's see how low I can go before I'm profitable. So let's do 30% win rate. Now with a 2-to-1, you're negative with a 30% win rate. So 3 wins, 7 losses, still profitable. Still profitable. Now let's see. 20%. Let's see if you're negative here. 2, 8 losses. Negative. So now if you have a 3-to-1, you can lose 7 trades out of 10 and still make money. Now let's see if you win, let's say 20, if you have a 25% win rate, because it's not gonna be whole numbers like that. It's not gonna be a perfect 40 or a perfect 50. So let's just see, 2.5, 2.5, and then you lose 7.5. Break even. So you see the difference? You see the difference? Now let's go back to the 2-to-1 and see if we're profitable or negative with the 25% win rate. You see with the 3-to-1, we'll break even, right? So let's go back to the 2-to-1. Change the code back. Change this back to 500. Boom. And those same numbers, you're negative. with the 2-to-1 risk to reward. So you see how your risk to reward determines the win rate that you need to have? That's simple. It's that simple. And the key, the name of the game is figuring out how to increase this. How do you increase the risk to reward? How do you increase the risk to reward without taking more trade? Taking more trades is not the answer. How do you increase the R multiple, the average R multiple of your trades? And to me, that is when the analysis comes in of your data. So if you scroll up, this is all what I pull from my Notion. I did my back testing, 7 months of back testing, I believe. March to October, 7 months of back testing on my Notion, and then I just exported it to the Excel file. And you look through this stuff, and I actually have in my Notion, let me just put it over here. So you can see in my Notion, computer moving slow. What is this for? Get that out of the way. All right, so I have the actual pictures, screenshots of each trade attached to each individual trade. So I can go back on all of these trades and literally analyze what was going on, analyze what happened, and look for different patterns. But how do I know what I'm supposed to be looking for? Is because of this data right here. It's because I have all of this data. It's because I have all of this data, and that's really it. And I'm just coming up with different ideas and different like KPIs, key performance indicators, to measure, to see, okay, how can I improve efficiency? And if I was taught this when I first started, if I was taught this in depth, I'd be much further than where I am right now, and that wouldn't have been such a painful process. So yeah, that's really all I got for today. I'm not going to go into charts and all that stuff because your strategy isn't my strategy, and I don't care to give anybody or try to convince anybody else to use my strategy or use what I'm doing because it may not fit your personality. Now, if you like what I do and you want to learn it, that's cool. Leave a comment and I'll get to you. But I'm just showing what I'm doing mainly in order to give people an idea of what they're looking at when they're watching my videos, and to provide a source of education, and to help avoid pitfalls that I've already experienced. So yeah, I hope you got something from this video. If you did, let me know in the comments. This is the end of the vlog. Like, comment, subscribe, all that good stuff. And I hope you had a great week. I'll be back Sunday. Take care of yourself. Peace.